should I rebalance and move my money according to like the process you said before?
Okay, so assuming you have all of the accounts set up that we just talked about, we personally at Jack, my main business, and how I like to do it is every week, right? So then every week you're rebalancing and you're moving money. So as money comes in the revenue account, you're moving it to the expense account. And let's say that you have all your expenses covered for the month, then you start moving it into the other accounts like we talked about. So I like to move the money and rebalance all the accounts, essentially taking out all the money from the revenue account and distributing it once a week so that I have a really good handle on the business. And the cool part about this is that then you don't even have to look at your income statement, your profit and loss statement. You can just open up your business banking account on your phone. You take a quick look and you'll be able to look at the health of your business in a second because you've moved the money to the right places.
Smart. But what happens if I lose money 1 month?
So if you...
Or more than 1 month.
So if you lose money in 1 month or over time, that's why it's really important to have money in your retained earnings account, because you'll have to draw on that money to pay for those losses, right? So you'll have to pay from the retained earnings, right? And the cool part, and not to make it too complex, right? If you lose money, you essentially get tax money back, right? So you'll be able to pull from the tax account, from the retained earnings account, from the profit account. That's where the money has to come to pay if you lose money. Now, I want to caveat this by saying that hopefully you are losing money just on a cash basis, but on an accrual basis, you are still making money. So it's that you're not just losing money month over month. It's just like, hey, in this 1 month, you'll lose money because someone didn't pay you on time and they're going to pay you next month, and you just have to fund the business a little bit. So that's an okay time to take a loss. But if you're losing money because you are literally just not making money and your expenses are higher than your revenue, then you have a bigger problem that needs to get addressed.
And what other types of like unforeseen expenses could there be?
What do you mean?
So like one would be like, I assume that someone would pay me and they didn't. Have you ever had anything come up that you had to use that like saved money for? Like a natural disaster?
Well, there's a lot of things. So there's let me start by saying there's a really important distinction between accrual basis accounting and cash basis accounting, right? As a small business, traditionally you work on a cash basis. So what this means is when you're reporting your accounting and your numbers and your taxes to the IRS, you do it on a cash in, cash out basis. So whatever someone pays you is revenue, and whatever you pay someone else is an expense. And that's typically how, when you look at your bank account, what you'll see is, hey, I received 100,000, I paid out 50,000, I have 50,000 left over, and that's my profit, right? Where a lot of people get in trouble, right, is when they only look at the accrual basis numbers, right? So they look and they say, wow, I've billed 100,000 and my expenses are 50. Woo, I've made 50,000. However, because a small business is run on a cash basis, let me just show you an example of where you might make a lot of money on an accrual basis. And just to be clear, an accrual basis is money that you've billed someone, or expenses that you've incurred, right? But not necessarily have paid out or not necessarily have received that money. So let me give you two examples and show you the impact of accrual versus cash. So let's say you've billed someone $100,000 and you have 50K of in expenses, right? But you haven't collected that 100,000, but you've had to pay out that 50. So if you've collected, right, $0, but you've billed 100 and you still have to pay out 50, let's look at that, what that looks like. On an accrual basis, it will show revenue of 100, expenses of 50, and a profit of 50, right? So it will look like you've made $50,000, right? Well, let's look at the cash statement and look at what that looks like. So you've billed 100, but you've collected 0. So your revenue is literally 0. Your expenses are 50. So 0 minus 50 is negative 50, right? So what that will show is, you'll see on the accrual basis, that is a good determinant or a way to look at the future health of your business. Hey, you know you will make 50K in profit in a cash profit at some point in the future. But on the cash balance, you're looking and you're like, shit, I haven't made money, right? So this is when it's okay to, I mean, it's not okay, but this is the one time when I'm kind of like, all right, we're allowed to pull from the retained earnings and these other accounts to fund that difference because we know we'll get the money. Or you can fund it with a line of credit or some other ways, but you know you're going to collect it, right? There's other expenses that might come up though that you don't know about, right? You might have gotten in a lawsuit or something else, and you need extra cash, and there's other expenses that come up that you just can't account for. That's why it's important to have cash left over in the retained earnings account. But yeah, that difference between accrual and cash basis is just super important to know. And when you're looking at the accounts that I outlined, those are all done to show what it looks like on a cash basis, because that's how you, at the end of the day, as a business owner, make money and are able to pull out a profit and live. So yeah.
Okay, so that sounds amazing in theory, but how do I save up money in my retained earnings? If I'm living month to month, how do I get there?
Good question. So I have a couple answers for this. The first is you really need to control your personal finances. So this is a little off topic for business, but it's very relatable, right? If you're the owner of the business, the amount of money that you need to live on that comes from the business, you can directly impact that, right? So if your expenses are higher, it means you need to pull more money from the business, and the business needs to make a higher profit, which means there's less money to be left in the business in the retained earnings. So step one, control your expenses and reduce them as much as possible. Don't get fancy or spending a bunch of money just because the business is making money. You really need to leave money in the business. Now, how do you actually make sure that happens? Let's assume you've reduced your expenses as much as you can, and you're only pulling out the money that you need to actually live. This is where it's really important to understand the unit economics and the finances behind your business to ensure that you're making a profit. So for example, I usually like to work backwards. So I start and say, how much profit each month do I want to make? Both as a percentage and as a number. So for example, if I want to make a 20% margin and 20K in profit, that means that I, say I make 100K, 20% would mean I have 80K that I can spend in expenses, and I'll have 20K left over. And then I know, hey, I'm gonna make sure that I put 10K in retained earnings of that profit, and the other 10K will go into profit to be distributed, or something like that, right? But you have to work backwards from where do you want to be, and then making sure all the math adds up, right? Because you may say you want 10K or 20K, but if the math doesn't add up, you have a problem. But here's the cool part, right? If you look at it and you're like, hey, I wanna make 20K a month, how do I do it? And if I'm billing 100,000 and I have 80K to spend, I can look and say, okay, so if I spend 50K on that, employees and salaries, I have another 30K I can spend on marketing or whatever else it is, and I'll still have 20K left over. But you always need to make sure that your profit accounts for anything that you need to live on, but everything else goes straight into retained earnings, and you build up that cash flow. And it takes time, right? Each month you may only put $1,000 in that retained earnings, and you keep doing that, or 2,000, right? And you slowly build it up, but you need to pay. My philosophy is that you have to pay the retained earnings first before you take out money, right? Which is uncomfortable for some people, but the business you need to feed the business, and the business needs money. So I always put money into the retained earnings first, and then take out money with what is left over, and that really forces you to make a profit and make enough money, right? Because you put money into the retained earnings and you can't touch it, you leave it, and then what's left over, that's what you have to live on, right? It's a different philosophy, and not a lot of people are gonna like it, but I'm telling you, it works, and this is how you can really control your finances and build a business that has a nice cash balance, and then eventually the business will really take care of you. But this is how I would do it, and how I did.
Do you have any fun, weird, scary stories about a time that you have either made a mistake with a cash basis, or it worked out in your favor? A silly story?
No.
Oh, okay. Because you're good with money.
So no, I don't, because I designed this system to make sure I didn't mess up on a cash basis. No, this is a good question, right? People are like, oh, did it ever not work? No, like, I've designed the system such that I couldn't be in a bad cash flow position in a cash crunch, right? Like, we've never had issues with cash flow or stuff like that. And I've always heard businesses talking about that, but I don't know, it was always just like very simple to me. Like, make sure that you're always making a profit, and if you're not, change it and address it, and make sure you're paying people and you're paying the business, and then you live off of whatever else is left over. I've seen when people try and take out too much money of the business, you know, if I said anything, you know, year one, I didn't put enough in retained earnings, and then I didn't have enough cash to make sure that I could hire enough people and spend money on certain things. So I actually put money back into the business that I had taken out. So that's the only thing I can think of, is really making sure you're really leaving enough in retained earnings so that you have cash to grow the business. But no, if you follow this method and the philosophy around how to spend money, you won't run into issues. Where you will is if you don't follow it, right? If you are not putting aside money for taxes, if you are not charging enough money, if you are not making a profit, if you are taking out all of the profit and you leave nothing in retained earnings, right, then you will actually run into issues. But no, I really haven't ran into many cash flow issues. We've always been cash positive.
If I have a business and I have a business account, what is the best way to manage my money through accounts, and how do I move the money in between the accounts, and why?
Okay, so a lot of people that I talk to, they have one checking account open for their business. So money comes in, money goes out, and that's just the way they run the business. And people run into different issues, like not having enough money for taxes, and not having enough money left over to pay themselves, and things like that. So I developed my own system over the years to make sure that I always had enough money for taxes, that I had enough money to pay everyone on my team, to make sure I was making money. And here's how I do it. So I open up different accounts. So I like to have open a revenue account, a expense account, a retained earnings account, a profit account, profit to be distributed account, and then a tax account. So those are the basic 5 that I like to have open, and then sometimes I open up more, but let's just start with those 5 and how I like to move money. So the revenue account, any money that someone pays us, I move into the revenue account, or collect to that revenue account, right? And then each month what I do is, as revenue's coming in, I move money into the expense account until all my projected monthly expenses for that month are covered, right? So you have to know how much you're gonna have to spend that month, and your projections have to be right, but that's a topic for a different video. So each month what I do, revenue's coming in, right? And then I'll just use some numbers so you can see what this looks like. So say I have $100,000 in revenue coming in, right? And my expenses for the month are $50K. So what I do is that first $50,000 that comes in, I move into the expense account. And from there, that's where employees get paid, where contractors get paid, where software gets paid. All of that gets paid from there. Now, you'll notice that, if I make 100,000 and then 50 goes in the expenses, but then I have 50 left over, what do I do with that, right? So this is where the other accounts come in, right? So you have two other accounts, or three other accounts rather, that are important: the retained earnings, the profit to be distributed, and the tax account. Okay, so here's how I move the money. The first money I pay is to the retained earnings account. Retained earnings is money that we leave in the business. Okay, so it's really important to have cash in the business for a number of reasons, but we'll go into those another time. But this is, retained earning is money you plan to leave in the business to have cash reserves. So the first money goes in there, and you can set the marks, and we can talk about this later, how you set how much money you need in retained earnings. But let's just say on a monthly basis, you want to contribute $20,000 in retained earnings, right? So just to recall what we had $100,000 in revenue, 50K went into the expenses, 20K now is moving into the retained earnings, right? And then you have 30K left. So then you ask, well, what do you do with that additional 30K, right? So this additional 30K is now profit to be distributed. So then that additional 30K goes into the profits to be distributed account, right? So we haven't paid out any taxes yet, and that's super important to keep in mind. The way I like to do taxes is that each month at the end, once we've closed everything out, so we have 20K in the retained earnings, we have 30K in profit to be distributed, what I like to do is have the business take care of all the taxes. So at the end of the month, right, I take my tax rate and I estimate it each year to be about 40%. This year will be like 43 or whatever your tax rate is, right? At the end of the month, take out that amount, so 40% for example, take out 40% from the profit to be distributed and take out 40% from the retained earnings and move that into the tax account. And then do not touch it, right? So at the end of the year, that money will be used to pay your taxes, and then the money you have in the retained earnings is actually after-tax money that you'll just have, and then the money you have in the profit to be distributed account is money you can literally just take out of the business and it's yours. And that's how I like to pay myself and distribute profits. So that's the basics of how I like to organize the accounts, and it makes sure that my expenses get paid first, employees, everyone's taken care of, and make sure that the business has cash left over, and it makes sure that whatever is left over after that is how I get paid. I like to personally have the business owner get paid last. Some people say the business owner should get paid first, and you know, it's just not the way I like to run the business. So this mechanism and how you move money, you'll realize the only way you actually get paid as the business owner is for your business to be turning a profit. And to me, that's how it should be. And that's how you also ensure that you stay in business. So that's how I run my business and how I move money in accounts. And it's served me well, and it's made sure that I've always had enough money left over for taxes, and that we've always made enough of a profit such that I can live and that I can make sure the business has enough to survive in cash. So there it is. I'll post more a detailed link in the description, so you can actually, I wrote a blog post that goes into this in much more depth and will outline things. This is just scratching the surface, but take a look at that blog post and you'll find more details, as well as some common questions that come up that people ask about this, and you'll be able to find all that in the article.